And welcome to the VSA Capital Tech and Transitional Energy Podcast. And it's Christmas jumper day, isn't it, Phil? Have you got your Christmas jumper on?
No.
Spoil sport. I have. Okay, so just so that any listeners, I've got my Christmas jumper on. It's actually Thursday, the 8th of December. Phil, as you know, I have just come rushing through the office because I've been out all morning with meetings. So I have done absolutely zero prep for this. So this is really going to have to be the Phil and Phil show probably because I am not that prepared for it. But look, we are in the Christmas season now. Various people will be trying to go to parties. Of course, Mike Grinch is trying desperately to make sure that people can't make their parties. But hopefully everybody is starting to enjoy the festive season. It's also getting pretty cold out there. The old bike ride is getting quite nippy. But I'd also stress that I do not bike and drink at the same time. I tried it once, it terrified me. Anyway, markets are, we're probably not sort of having a Santa rally this year, mainly because I think we sort of had it we had it early, we had it in November, didn't we? Markets were really quite good, but there is, I feel, a slightly more positive tone to the markets, or maybe it's just that everyone's gone away and so they've stopped selling. But of course, you've got to remember that, in a market is all about buying and selling to a certain extent. And if everyone's done the selling they want to do and there are no more sellers, but a few buyers come in, it goes up. It really is that simple at times. Anyway, what are your big thoughts at the moment, Phil? Have you got any big thoughts?
Yeah, I mean, I think we need to now see how we get through winter. And certainly on the energy side of things, I think there's been a lot around importing LNG, stoking up gas storage, gas supplies, and helping to see Europe through the winter. So I think some of the news that's been coming through on that has been a bit better than expected. We've not seen, in terms of company results. I've been looking at some of the consumer results this week that have been coming through that have not been overly, they've not been overly bad. I don't know. I think quite a lot of the sort of pessimism, as it were, has been as evident of it being baked in.
No, look, as you say, I read the RNSs every morning for my 6 at 7 o'clock, and actually, you still get the odd below expectations, but in general you probably get more, we're above expectations than below. Most are coming in pretty much in line. Now you could say, well, is that because the companies are being overly optimistic at the moment? It hasn't really, the whatever hasn't hit the fan yet. Being polite there, note that, most unlikely being polite. Anyway, there you go. I don't know, I do feel relatively happy. I think obviously next week we've got a Bank of England decision, could go up 50 basis points to 3.75.
Yeah.
People are talking about it peaking next year at about 4.25 or something interest rates, and then coming down in the second half of next year. As we look into our crystal ball for next year, and a lot of people are starting to do that, one has to feel, I mean, we're brokers, we're always bullish, but I would, for choice, say the market next year will go up. Obviously, China is a big swing factor. China, obviously, quite a big change there, relaxing some of the COVID rules. Got to be careful, President Xi. If you give in to the protests, you'll get more protests. Ukraine's going to rumble on. Ukraine's like Vietnam. It'll just go on, I think, for years and years and years. We're going to get sadly rather tired of it all. But yeah, it's not all bad. There we go. Yeah, but actually, I have no magic. This could be quite a short podcast because I've been running around. And
okay.
Let's, unless we've got anything sort of dramatic to say, let's kick on with some results and things. Maybe that'll stimulate a bit of thought process.
Well, exactly. And results, sadly, time of year are a bit thin on the ground. But let's just go through some of those. And and also, I think the markets are looking to they're always, as always, looking to the US. But as we get into January, we'll see how fourth quarter's done in the States, and that'll be a good indicator as well, and could certainly move things in the market. Maybe a good start to the new year. But in terms of sort of results and announcements, I picked up, and this is one I've not looked at in detail, I hasten to add, but looks a very interesting company for our listeners, and it's called Equals Group. It's fintech payments to SMEs. Then a trading update. This company develops payment platforms for managing movement flows, payments and cards. So this is, of course, all small businesses are, either issuing cards out to clients or moving money around. But it's a focus on small and medium enterprises. Also, they're involved in foreign exchange as well. But they looked like, this is one I've got to look at in more depth. I'll just look at it very quickly. But
the bottom line, they had a trading update, didn't
they?
And they are ahead of expectations.
Yeah, absolutely. And this is in the SME and medium enterprise space, which, given softening economies and all of that, would be pretty sensitive, and they are doing pretty well. So I'm always a firm believer, Andrew, in companies that do pretty well in tougher times, when times are good, are going to do very well. So just a first look at that one.
Very good.
Moving on swiftly, one that I've known from many years ago, involved in the IPO of this originally, is Oxford Metric PLC, ticker is OMG, market cap's 133 million. They're the full year results to September end. And this company develops motion capture technology. So I don't know if you've ever seen when they're like making films, and the original Star Wars films, and their tech was used on the Titanic film of the film of the Titanic. So when you see the figures on the deck, what they actually do is they put special ping pong balls, what was that description, capture human motion, convert that into computer information and computer imagery, and you can then go and simulate a whole load of figures. So you imagine the applications for this in gaming, for virtual studios. Star Wars, you use it, you kind of film a human moving, dress them as a robot, and then suddenly you can replicate loads of masses of robots on screen. So super technology, but also because it's capturing motion, is used in medical applications. So people with limb injuries or difficulty walking, whatever it is, motion problems medically, can be applied to that to capture what's happening. So they had results, headline revenue of £29 million. That was up 4.5%. They will say restraints are still seeing global supply chain restraints. They've got motion capture cameras, so that caused some deferred orders, and their profits were slightly down to 2.6 million. But they said that they're also investing at the moment in clearly in technology, but have seen some deferred orders. But why am I highlighting this one? Is that they disposed of a division called Yotta, and they got net cash of £47.1 million for that disposal. So they're now sat on 68 million of cash, which of course gives all sorts of options for them in the future. And they're also seeing stronger demand from the entertainment, from studios. And then for folks like ByteDance, who have bought systems for viral dance moves, and there you go. They're used in the other Voyager experience for simulating movements there. But so interesting company to look at, I think, now, and is sat on a lot of cash, which gives it options.
That is a lot of cash.
133 million market cap, 67 million of cash, and generating cash. So yeah.
Interesting. We better go and have a look at that one. I'm sure listeners will. Yeah, right. Keep going. What else you got?
Right. So probably results that are a little bit more challenging. We saw Saeta Electric Motors, ticker is SED. This one IPO, I think, was last year. Spelled SAEITTA. There we are. Saeta, I hope that's it. So they had interims to September end. They developed electric motor technology. Applications for this are going to a variety of electric vehicles, is what they plan. Scooters, motorbikes, cars, marine engines, etc., etc. But they, look at the period of results. They had, grant income of 1.3 million. Loss before tax of 10 million. Clearly, they are investing a lot in developing their technology. EBITDA loss of 6.3 million, and they raised just under 24 million pounds in a placing in August. So quite early stage there in electric motor tech.
I mean, it's known as sort of the tuk-tuk company, isn't it? I mean, the one issue I have here, as you say, it was a very successful IPO. They have since come back and raised more money. The one issue a little bit is that they keep sort of a little bit changing their plan as to what their focus really is, don't they?
Yeah, there was an element to that, buying manufacturing, a very large manufacturing plant with the intention to scale up. But yeah, there has been a bit of movement there, strategy.
Yeah, I mean, they lost. So they had interims. Obviously, they lost 10.4 million. They've got net cash of 22. That's an interim. So I mean, they've only probably got still 12 months of runway. By the way, you did spell it wrong. You forgot the E. It's got an E in it, Sayeta. Sorry, that's just me being pernickety. Look, the price has come back as so many of these, what I describe as transitional energy type electric motor battery companies have come back. It peaked actually at nearly £3, and it's all the way back to 69. It's interesting, but I think there's still a lot to prove there. And actually, I'll tell you, the interesting thing is Gelion also reported on the same day as Sayeta, and they just reported a sort of proof of performance viability. Same sort of thing, they've got a sulfur cathode technology. It's a tough gig, all of these ones. As we know, I don't know if you saw that announcement, Phil, but it is tough. So I just, tread with a little bit of caution, maybe.
Yeah, absolutely. Right. Moving swiftly on, SDI Group. So SDIS, market cap 159 million. They had interims. This is a sector that I really like because you can build up what they call portfolio companies. And they have a portfolio of companies in scientific instrumentation and technology products. And so they're highly inquisitive, but there are even bigger portfolio companies, acquire companies like SDI Group. But so just looking into what they do, they supply different sorts of digital imaging, sensing instrumentation, all sorts of stuff that's used in laboratories to develop things. And they, in their interims, they were reporting that they made 2 acquisitions during a period. And here's an example of what they do. One company they acquired is called LTE, it's a UK company, and they design equipment that is used for sterilizers, decontamination, and thermal processing. This is for life sciences and medical. And they also acquired a company called Fraser, and that's for anti-static products, which I don't know a bit about this. Eliminate, clean, generate or measure static electricity. For industries, you think it, but they generate a lot of static. Plastics industry, packaging industry, printing. So they acquired 2 companies during the period. But there's a bit of a reaction in the share price on this one. They enjoyed a very, very good run. They had a very strong COVID period. So they've got what are called ATIC cameras. These are very special cameras that are used in scientific applications, things like ophthalmics, in X-ray instrumentation, but where you've got very detailed images that need to be captured on camera. And they had strong sales, I think, during COVID on test equipment that's being used on DNA testing. So they'd said that they had seen, I think, a bit of here we are. Demand from OEM customers was more variable in this half year than the equivalent period last year. So chiller products and cameras offset to a degree by subdued demand for capital equipment for general laboratory use. So a little bit of mixed demand there probably caused a bit of pressure on the share price. However, they did say, we look forward to delivering full-year trading performance in line with market expectations. So there we are. And this is an interesting theme here, Andrew, is, all these companies, they're seeing pressure on, they're dealing with pressure on inflationary costs and components, etc. All these companies are still seeing all these pressures, but they are the market generally setting expectations quite well. And that's why they're meeting them. That's a very good thing. Pressure.
That is the other question. Is it the fact that the market is setting expectations well, and so we're getting things in line? I have those expectations already come down from the future? I don't think they have, actually. I think that companies are still, it's remarkably finding their way through, and particularly in technology where you have a slightly different cost base, perhaps. Yeah. But yeah, I think probably things are still, as we said, we started still going okay.
Yeah, in terms of overall sort of demand, we're not Well, we're not seeing, well, we keep looking at, keep reiterating this, is about capital expenditure and real cuts coming through in CapEx. We're still not seeing that come through yet. But anyway, we're tracking this for our listeners. Something else that caught my eye was, for investors, Mobius Income and Growth VCT. I suspect you maybe know this fund, Andrew.
Actually, I don't. You've caught me out, Phil. Well done.
Right. Well, hey, well, there we go. Well, that's a little Christmas present for me, isn't it? Catching you out. Right. Anyway, so the they announced. So Venture Capital Trust is what the VCT is, that you can invest in Mobius because it is quoted, and they said that they were looking to raise up to £14 million with an over allotment facility to raise up to a further £8 million. And they announced that they had received applications for its £22 million limit. So that was good to see and shows that there is investor appetite generally. And on kind of that subject, that we had Frontier IP Group, who we look after, client of ours. And they have a portfolio of tech companies where they own stakes for the work that they've done in helping these portfolio tech companies, general university spin-outs, commercialise their tech. We went to Doxford, the Air Museum, fantastic up near Cambridge, and they had a number of their companies presenting. And I've got to say, it was super to see so many investors attending this. It was a good event run by Frontier IP on their companies, and so it's just great to see right now, Andrew. There's still interest, and people are looking for ideas ahead on businesses.
Yeah, no, I mean Frontier IP has been really good. Now, a couple of ones that you've talked about in the past, Phil, you might want to just update. We had interims, didn't we, from Solid State, and we had a statement from BATM and interims from Red Centric, I think.
Yeah, we did. Hey, do you know what? I've not printed off the Solid State interims, so I'm going to have to do this by memory.
Well, actually, no. I'll tell you what. The revenue is up 50%, earnings up 38.5%. And listen to this one. The strength of the order book gives the board significant confidence for the second half and into full year 23-24. And the board is confident of exceeding previous expectations. So that was a good one from Solid State.
It was a cracker. I listened to the analyst meeting. The ticket is SOLI. The company, just is one that Andrew and I have discussed in the past. It's been performing really well. What do? They originally they were a distributor of electronics components for semiconductors. So and they still have that business, but they've acquired. But they also have a business which is actually building electronics applications, especially specialized battery applications. So where you've got for instance, you've got equipment on an oil field, in submersibles. Where the batteries need to be in special casings and surrounds, they manufacture those. Computer boards, but they acquired, very interestingly, made a US acquisition this year in a company in the States that does specialized battery assemblies. And they also reported in the results that, and you will see announcements from them winning contracts related to NATO. And they were saying that in the US, they've been seeing strong demand for drones and battery systems for drones. So a very, very interesting company to look at. Shares have been doing well. And yeah, very positive set of results and a nice upgrade from them as well.
Yeah, I'll tell you what, I know I've just rushed in, but Red Centric and BATM were today, actually, so I can remember them. Red Centric, and I'll cover them for you. The interims, I was a bit confused reading their statement. I wish people would have more simpler statements, but actually the revenue growth was really strong, but the P&L was going down. But they seem pretty upbeat, so I think it's sort of fine. And likewise, BATM was quite interesting. I mean, it was all, again, sort of in line, quite upbeat, strong balance sheet. But then they finished it with an interesting statement, which BATM remains confident in the prospect of the business and continually looks to explore all options to deliver shareholder value. I like that.
Yeah, you could read an awful lot into that one.
You can. I like companies that do that.
Yeah.
Anyway, there you go. I've covered those two for you. Made it very simple.
Well, that's it. there have not been a lot of results coming through. The only other thing is, in Newmarket where I live, we have a very nice BP garage and Marks and Spencer's, and there's an announcement from BP this week that it's going to install high-speed charge points at 70 M&S retail outlets. There we go. First pilot sites are already open, and they are targeting installing 900 charging points within the next 2 years. Whoa, look out for that if you've got an EV.
Yeah, we like a charging point. It's probably worth just mentioning actually at the beginning of the week, Nick Reed, the CEO of Vodafone, stepped down. I think it was all a bit of a coup, so to speak. And that obviously got the newspapers, should we say, all excited, being a FTSE 100 stock. But I think if that's it, we will have it as quite a short one, because I say we're actually really rather busy here, bizarrely. But I think also next week, which will there's bloody train strike, so God knows where we'll get to, but we may be in, I'll be in. But we may have a little bit of a Christmas stock selection, Phil. So I'm telling you to go and prepare for your stock for 2023. I think we did it last year, and I can't remember what we all picked, but we probably got it horribly wrong. But likewise, if anybody listening wants to send us in their stock pick, then we won't say who it is that said it. We will actually mention those too if you want. So for a bit of fun, come on, a bit of Christmas entertainment.
There we go. There's a challenge for our listeners, and of course, a nice challenge for me, Andrew.
And we may record it a little bit early. I'll tell you, actually, next Thursday, I must confess that I have my annual ARM Christmas lunch, which I do every year with Robin Saxby and all the old ARM management right from the beginning, which is always a lot of fun. I normally get lots of interesting ideas. So it's Chatham House rules at that lunch, I'm afraid, so I won't be discussing them. On that note, Phil, we'll call it a day. It's a quick one. And yeah, next week. See you then. Bye.
Super. Look forward to it. Cheers, Andrew.